Here's how Trump's tax bill will impact your finances. If you're a retiree, you should probably pay attention to some of these, especially the ones at the beginning. Okay, first one is that the standard deduction is changing. This is increasing to 31,500 for joint filers and 15,750 for single. Here is actually the big one though. If you're a senior, this is the additional $6,000, call it senior deduction. So this only counts if you are 65 and older. Another caveat is that it's only for the 2025 to 2028 tax years. After that, it goes away. So if you're 65 and older, and let's say you're married, here are the deductions that you qualify for. You would have the $31,500 just married filing joint deduction that everyone qualifies for. But then you also get a senior deduction that was already in place of 3,200, and then you get this additional $6,000 deduction, which gets you to $40,700 in, call it, free government deductions for the 2025 tax year. All right, another big thing that you should be aware of is the SALT deduction. This stands for state and local tax deduction. The SALT deduction was 10,000 and now it's increased to 40,000. So what you would do is that you would add up your state taxes, add up property taxes, maybe some other local taxes, and you can take a deduction, an itemized deduction of up to $40,000. Okay, here's a fun one. The charitable deduction, they are increasing an above the line, so non-itemized above the line deduction of $2,000 for a couple, $1,000 if you're single, because before, only about 1 in 10 people are actually itemizing. And so if you are giving to charity and you're being generous, but you're not itemizing your deductions, you don't get any sort of financial benefit for giving to charity. Another boost is an increase to the estate tax exemption. So right now, the estate tax exemption, meaning that you can have an estate of such a size and not pay federal estate taxes, is $15 million per person. So if it's a couple, you actually can get double that and it'd be $30 million a person. A completely brand new deduction is an auto loan interest deduction. So you can now take an above the line $10,000 auto loan interest deduction if you're buying a new car. Now, there are some caveats. The new car has to have final assembly be in the United States. The vehicle can't be used for commercial purposes. It has to be for personal. There's a weight limit. Your adjusted gross income has to be 100,000 or less if you're single, 200,000 for married.